Into agriculture today, and we continue our grain market conversation with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, as we continue our conversation, moving on to corn and what are we seeing domestically?
Really, for corn, there was no change in the supply demand balance sheet this month. And why? Well, in January they had the new production numbers out here in at the end of March. They'll have the February 1st stocks numbers. So far for corn, we've had really pretty good weeks of exports. Been moving pretty well. In and as I understand it, ethanol usage of corn doing decently. In fact, just on a side note with that on that, Kansas trails Ohio, Indiana, Illinois, in terms of the corn price being paid at ethanol plants. And when you look at the drought map in those areas, it's drier out there. So I think there's probably some aspect to that. Hey, where these ethanol plants are trying to get ahead of supplies when they see a dry situation. Anyway, point being that pretty strong exports for corn, and we're bought ahead. Uh, to the degree that we're at 75% of the USDA's projection of 2.45 billion bushels, and with only about 44% of the way through the market year, about 23 weeks. So we're doing pretty good. And issues that drive to that, I think Guy will talk on in terms of Argentina, Argentine dry conditions, and some concerns about the second crop corn in Brazil. So anyway, you got all that going on, and we're just still the only change that did happen in that balance sheet was that they did raise the price of corn from 425 to 435 for the season average price, and that's just following. I think what's happened in the futures, and we have had a run up here in late January. Have tended to basically bounce around $4.90, up and down that about 5, 6 cents, 5, 6, 7 cents each day for corn, and of the commodities so far here of late, corn has been as strong as about anything, as strong and consistent. Guy, how about on the international side?
Yeah, looking at the international side, I think we'll start off talking about our non-US importers. That was the big number. It was reduced by 2 million metric tons compared to last month. China was the big mover in that as they dropped corn imports by about 3 million metric tons. Uh, Not surprising, they did increase Southeast Asia's imports by about 600,000 metric tons. So they sort of offset there a bit. So our exports here coming out of the U.S. have been quite good when you think that China's been a bit absent from that. Just looking at a couple other situations, Ukraine exports were down 1 million metric tons to 22 million. And with an increase in domestic feeding there. No change in Argentina corn exports at the 36 million metric tons. That's compared to 25.2 million metric tons. Keep in mind, Argentina was having a significant drought last year, which impacted their summer crop production on that. So we'll keep watching those programs as they go by. On the Brazil situation, interesting to look. It's hard to see any bid offers that on a FOB Brazil situation at the moment. And I think there's some logistics and some concerns on just how quick we're going to get that first crop off and to port. But as soon as it's coming, it's it's a big discount to U.S. corn. I want to say just under $20 a metric ton at the moment. Once that starts coming to
Oh,
market on that.
and that goes with what you've said so often, Guy, about other countries not being equipped to store grain or to finance the storage of grain or to handle it as well as the
Yeah.
U.S. is. So we just by market ability and end up storing more. Sorry to jump in on you
Yeah.
as you mentioned
Just
it.
looking to kind of to wrap up the world coarse grain situation, ending stocks were down 2.8 million metric tons to 317 million metric tons. That's now 29 million metric tons below last year. Notable change. Global corn ending stocks were 3 million metric tons lower, down to
Yeah.
290. So that's why. And one thing I think is worth mentioning is as corn becomes a bit scarcer, a number of these alternative coarse grains, barley and sorghum, are starting to calculate into the picture, particular with the absence of China in that sorghum market. We've got some reasonable sales on the books, but they just haven't shipped those. They keep pushing them back. Was it last 4 or 5 weeks? There's been no actual loadings or shipments of sorghum, and that's really weighed on this domestic basis. I think at the moment now we're 40 to 50 cents below corn price across a lot of areas in Kansas, and that's starting to price it into both the feed ration as well as some of the ethanol plants are starting to pick that up too.
On that, I want to on corn, just on the feed grain deal overall. You've got major exporters 2 years ago 7.9% stocks to use. Last year 6.1% stocks to use. This year projected at 3.3. So that critter's tightening up. And on the export side, on the supply demand balance sheet for grain sorghum, it looks like the USDA, and Guy, see if you agree with this. They saw their export situation was really, really weak. In fact, so they lowered it 50 million bushels, total sales of 46.3 million bushels, 26% of the way to their forecast 175, and they dropped that 50 in that report,
Yes.
and 44% of the way through the market year. So they're really, really trailing. So when they took that 50 out for sorghum, they said, well, we just got to go somewhere. So they put that over into feed use, food use, and I think they're counting on low price sorghum to compete. Now, what you said may come into play in that if corn tightens up, then here's a bunch of sorghum sitting here available at pretty low price. And if anything, market forces may change this around, but we're waiting for that to happen so far.
Yeah, the other key thing I think to keep in mind is as China drops their corn imports, uh, keep in mind China's got a 65% tariff on corn imports when it's above the tariff rated quota amount. And as they drop that down, I think it's 9 million metric tons. If it drops below that, one thing that puts that premium on sorghum, which does not have that 65% tariff going into China, it does have a fairly immediate and direct impact on the sorghum price there as well.
What are we seeing for soybeans?
Domestically, again, no change in the supply demand balance sheet. The USDA did, if anything, they lowered the projected price 10 cents down from 10.20 down to 10.10. You're still sitting at about again 6.1% stocks to use 2 years ago, 8.3 last year, 8.7 this year, and the I guess the pace of exports, if I can just mention that real quick, for soybeans here, that we're still sitting above an annualized pace, 12-month pace of 18.2 million bushels a week, and had last week 40.5 million. However, our window when we're price leader before all the supplies really come out of Brazil is rapidly closing. Guy?
Yeah, on the global soybean situation, I'll just talk about the big elephant in the room there is China. USDA left their imports unchanged at 109 million metric tons with their crush at 103. I'd suggest that's probably a bit on the high side. We'll see where those start coming from. A lot of that moving forward is going to sort itself out with the whole tariff situation that's evolving there, and that's changing and evolving every day. Ending stocks globally for soybeans were dropped by 4 million metric tons. And they're 12 million metric tons larger than they were the end of last year. So soybeans were starting to grow some burdensome supplies there, and it'll be interesting to see if price tries to find some demand. Just going back to the tariff situation, one thing I think it's important everybody to keep in mind, I don't think we're going to change that global demand number too drastically. What the tariff impact will be, it'll have an impact on trade flows, and that comes down to freight rates and freight spreads. The soybeans out of Brazil and the U.S. will just go different directions. And as I started off talking about the freight rates, with cheaper freight rates, those comparative disadvantages aren't as great when freight is cheap as they are when they're expensive. So the impact of those changes in trade flows due to tariffs is going to be somewhat minimized.
I would add, if I could add in, if we have time, Shelby, within that soybean complex of meal and oil, we've continued to have what's a good scientific term? Gangbuster sales. In that here is last week we had 38.4 thousand, yeah, 38.4 metric thousand metric tons. Extremely bullish. You need to pay, and we're actually over, or excuse me, at 671.3 million bought. We're actually bought ahead. We're about 92% of the way to the projection about 730. I guess what I'm stumbling around to say is that the week after week after week, what used to be just anemic soybean oil sales now, because of what's going on in Asia, et cetera, is now just exploded. And I wonder how it's going to come back and affect domestic crush and here in the U.S. and affect the balance sheet. Guy, from your experience over in the Asian markets, do you have any
Yeah.
thoughts on soybean oil?
Yeah, look, the oil demand's been pretty good. Palm oil, India has actually reached a 14-year low on palm oil imports. They've been substituting a lot of other oils in there as well. I think the key driver in the U.S. is how this biofuels policy is going to sort itself out going forward, because that'll be the big driver of not only biodiesel and vegetable oil demand, but also into the corn market and ethanol, which that's been pretty strong so far.
These tremendous oil exports are competing domestically for oil. You
Yes.
know, and that's an issue, and bioenergy policy being up in the air. We're not exactly sure where renewable diesel, renewable and biodiesel are going to go. So that that remains to be seen. That um, some guidance that in that industry that was intended to come out has been delayed as we try to figure out what the direction will be in terms of energy policy. And if we didn't have this strong vegetable oil demand overseas, we'd probably have a lot. Probably have a lot slower movement and some even weaker prices than we have on that.
Dan, Guy, I appreciate you both take the time to join us today.
Thank you
Thank
very
you.
much.
That was K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. We're cutting to a short break now on Agriculture Today, but we'll be right back.